and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Now, this time of the year is invariably marked by perils arising out of the force of nature. Floods, falling trees, landslides, events that can have a damaging impact on not just life, but also assets like your and my home and our cars. Well, this week on the show, we focus on the latter and find out the insurance options available, which can minimize at least the financial hit of any such event. My guests are Tapan, Singhel, MD and CEO of Bajaj Allianz General Insurance, and Supriya Rathi, whole-time director at Anand Rathi Insurance Brokers. Ladies and gentlemen, thank you very much for joining us on the show. It's an important subject and we're going to do it bit by bit, home first and then we'll get to the car. And therefore, I want your opening thoughts. Home insurance as a product is not that popular and we don't see it being advertised that heavily either. But I guess it's something important worth looking at. Mr. Singhel, you go first.
Yes, thank you, Surabhi. I think first and foremost, congratulations on putting such important topic on air. Let's look at what do we do when we earn money. Since it's a money, which is the topic here. So when we earn money, we typically would buy home and then build contents in it. So we'll buy our furniture, our television, our laptop, and we build content. So when we think about it, if we look at all the earnings that we have in life, majority of it will go into home, wardrobe, contents. And is it not funny that when we invest so much in it, we are not insured? And typically we look at the cost of insurance also. If I give a kind of a benchmark, if a 1 crore rupee sum insured, the premium would not be more than 2,400 rupees in a year. So can we imagine that we are talking about 200 rupees kind of per month for insuring something for 1 crore? And that's what we have built over so much time or so much hard work, labor that we built it on. So the first thought which comes to my mind is, why should we not be insured? When we invest so much into building a home and the contents in that. That is the first thought. And for which the premium is very, very reasonable. And the coverage is really very, very good. So that's the first thought which comes to mind, Surabhi, to begin with.
Yeah, well, that's a very, very impressive number that you just gave us. I can't believe it. I mean, you can get a 1 crore cover for just as little as that amount. Supriya, your thoughts? Sounds almost too good to be true. There has to be a catch, the fine print. But you tell us your thoughts first on why home insurance.
Thank you, Surabhi. So yeah, correctly, like Mr. Singhel said, the home is your most important asset, and it can be covered at a very, very minuscule price. So why not take that cover? I think the biggest challenge is awareness. So hardly 1% of homes get insured. And now more than ever, there is a need to insure because we've got natural calamities hitting various regions across the country on an annual basis, and much more so, whether it's cyclones, whether it is floods, and all these perils cause immense devastation and loss to home insurers. So why not get that? The fine print, you correctly said, is that one is a cover for the structure, but then there is a cover for contents. Both together you can get at a fairly cheap rate, like Mr. Singhel said, less than 200 rupees a month you can get a cover. Of course, then there is coverages for valuables such as your jewelry, such as your art, expensive furniture, etc., which might cost a little more, and also your white goods and your electrical goods, which would cost a little more, but still it would be much smaller than the amount that you have actually invested. So it's important to look at the fine print, take comprehensive coverages, and be rest assured that your most valuable asset that you have, so many memories attached to, are comprehensively covered.
Okay. I guess you've completely convinced us, and at pricing that's as attractive as 200 rupees a month, then why not look at it? Now, there are two types of policies. I'm aware of that. When you're talking home insurance, there is the named perils policy. I think it's also called the fire policy. And then there is an all-risk cover. So let's start with the basic one first. Supriya, give us some of the features of this specific perils policy.
So specific perils will cover essentially fire, flood, and your perils such as some acts of God. But your all-inclusive, comprehensive cover would include cover against theft and burglary inside your home. Would also have you could have the option of taking accident policy, liability for your house help. You can even include pet insurance in that. Plus, like I said earlier, have comprehensive cover for your contents such as electrical breakdown, and also for your art and your jewelry. So all of those come as much more comprehensive covers. So you have both those options. And now IRDA has actually issued a standardized cover, which makes life easy and also makes it has very, very attractive features and makes claim settlement very easy. So that is one option that we must always look at. And now it is readily available by all the insurers.
I think you're referring to this Greh Raksha policy,
Yes.
which is a mandatory cover. Now, the regulator says that insurers offering home insurance should definitely offer at least a standardized cover, pretty much like what we've seen in health insurance as well. So, Mr. Singhel, now fire, lighting, explosion, earthquake, volcanic eruption, storm, cyclone, typhoon, tempest, tsunami, landslides, and even terrorism. This is a really comprehensive list. So then should I not just stick to this particular type of policy? Why do I need a comprehensive cover then?
Surabhi, one, I'm impressed with your knowledge base. But first, I have a small grievance with both the ladies here. When you talk of fine prints, like this is something which has been widely misused against insurance company by stating this, and that creates a wrong perception. There are just no fine prints. It's a question of just understanding it. And I think you have broken it very finely. So when you look at the covers you mentioned, fire, earthquake, implosion, explosion, storm, tempest, inundation, or terrorism. So if you look at these are named perils. In this peril, if you have taken, and like just mentioned, IRDA has come out with this policy, you don't even have a depreciation, under insurance happening in that. 20% of your content is also covered for this. So even your jewelry, even your contents which is there, obviously you have to, if it goes over 10 lakh rupees, you have to declare that. But that for these perils is covered in the price I mentioned to you, which is less than 200 rupees a month. So if you look at in the name peril, it's such an amazing thing. Whatever you think of, like you rightly mentioned, that is covered. So for that, for your content, for your building, and for this, which is mentioned, it gets covered in the same price, which is phenomenal, I would say so. Now let's look at what is so special about all risk policy and why should we take so. In the all risk policy, what happens is everything is covered except exclusions. And typical exclusion should be that which is not accidental in nature. That is what it is. Let me give an example. Let's say if a small child is riding his bicycle in the house and breaks the panel or the television, that would be covered if you have an all risk policy. Now, if you look at it from an all risk policy perspective, also there are other sections to it, which was mentioned by right now, by Supriya in terms of let's say electronic breakdown is there. Though if your television breaks down, or let's say we have a policy in Bajaj, which is called My Home. If your laptop breaks down, we give you a new laptop. If it's within 3 years' time. If your electronic items breaks down, you get a new. So breakdown coverage would come under when you take a comprehensive policy and you have the sections in which you take these which is there, and that would take you beyond the perils which was mentioned here. So fundamentally, to begin with, I would recommend that you should definitely have a home cover. You really put in all your life savings into that, and one incident can, and we know how Bajaj earthquake happened. Every year we see so many cyclones happening. We see so many. Let's say if somebody reaches at my age, let's say 54, and let's say towards retirement, and you build a house and build contents, and let's say retire one day and suddenly it just gets washed away or destroyed, then where will I be able to build it again? If I'm not insured, and I've paid off all my loan, suddenly all my life saving is gone in a moment. So fundamentally, to understand this very, very clearly, that the minimum basic one should have is what we just mentioned, the name peril ones. But now if you really want to take care of all that is there, then you should go for an all risk cover and you should add on this, you take the subsection which is there, including breakdown of white goods, including going for jewelry in terms of chain snatching happening on the street, or loss of baggage happening, or the liability cover which was mentioned.
But
so very good cover.
One quick follow up. Surely for that you won't charge me just 200 rupees a month. You'll charge me a lot more, and we'll come to the idea on pricing in just a moment. But theft inside the house, is that covered under the first category, the perils policy, or is it covered only under the comprehensive cover?
So you're asking me?
Yeah, Mr. Singhel.
Yeah, okay. So if you look at in the name peril cover, when the peril triggers, then if that burglary incident happens, that would be covered, in the named one. When you take a comprehensive cover, then the peril need not trigger for that to happen. No? So that is the differentiation which will be there. So when you take the named peril cover, then losses due to that peril would be covered. No, that is why there's no fine print. That's what I keep on saying. It's so simple. Let's say you've taken a cover which covers you against fire, earthquake, terrorism, no flood, storm, tempest, inundation, no. And if that is what the cover you're taking, explosion, implosion, then any loss happening because of that cover, that triggering of that event would be covered. No?
See, but that's exactly the fine print. So if the burglary happens while there is cyclonic damage, then the burglary gets covered. Otherwise, it won't. At least in the basic policy, the standard policy.
Yeah, because you've taken the name peril, no? So that's not a fine print. You've clearly taken that cover. So it triggers on that. Now, what is the confusion there?
Sure. No, that's exactly why we're having this very candid chat to clear all confusions. Now, let's come to an important subject, arriving at the sum insured. How much home insurance do you need? Supriya, where do we begin on this? Because there's several, different methods. I think there's this reinstatement and there is an indemnity-based plan. That's where it gets a little technical and confusing.
So, in the home insurance, broadly, you are covering structure and you are covering contents. So, structure really means the four walls and the various structures that you have put in, the material that goes into building the home. So, when you're living in an apartment, typically the housing society will cover the common areas and you will cover your particular home. So, the structure, typically, how you take a sum insured broadly is on the capital value and the estimated amount of reinstatement cost. So, or the construction cost. Now, that really, ideally, you should be taking it on a reinstatement basis so that you don't hit depreciation and you are getting adequate cover, because 10 years later, if you are, and which is why it's important. So when I mean fine print, it's important to look into the details that actually you're going in when you're going in for a home insurance. So here you will need to take it on a reinstatement, which means every year, at least have a look at what is the current construction cost. And based on that, if we take an adequate sum insurance, then we are adequately covered in case something happens. But if we've taken it from 10 years ago and the construction cost has increased because of inflation, then obviously we get very little. And as Mr. Singhel pointed out, a very important cover that currently for the Greh policy that has been standardized, there is no underinsurance. So, for example, if you take a sum insured of say 15 lakhs and you have, maybe there was an underinsurance because you hadn't adequately at that time insured. But if you suffer a loss of 15 lakhs will be paid for you. Will be paid to you. So that's a very good element of the claim policy. So yes, take it on the reinstatement basis. Okay. And for contents, it should be the value. So typically, based on your receipts and the current value of your white goods and your furniture, etc., so that you get replacement which is relevant. The amount is relevant to how much it will cost you to replace it today.
Okay, got that. Mr. Singhel, your thoughts on exactly this, because this is the most critical part, deciding how much insurance to take. The house today might be a value of 2 crores in Mumbai, but you perhaps don't want to take such a large cover. So how do you decide? And then how do the premiums vary? My most important question then, for a comprehensive cover.
Yeah, so when I speak to my friends, I tell them, bhai, if you take the best sum insured, which is agreed value, and let's say take a reinstatement or you take a market value, kitna rupee ka difference aayega? Let's try and calculate this. When I told you 200 rupees for 1 crore rupees, so let's say you go for a reinstatement, comes at 1 crore rupees, you're paying 200 rupees. Let's say you go for agreed value and that comes to, let's say, 2 crores or 3 crore rupees. So you pay 600 rupees a month, And let's say if you go for market value, you pay about, let's say, something like 60, 70 rupees a month. But just for like 102 rupees a month, you want to save on premium, like that is the last thing you want to save on. Believe me when I say this, I've been an insurer for 30 years. Believe me, the expense on insurance is the least expense in all expenses. And that you want to do a micro saving, and when things go wrong, it really pinches you hard. And that is when people start talking of fine prints. It's not fine prints. It's a conscious call that you take. If I would recommend, I would say go for agreed value. Agreed value means what? Agreed value means that if my flat, in this society has a value, if I sell as per the market, which is there, it's 3 crores. then I would get paid 3 crore rupees when things go wrong, and then I can buy a new flat. On the reinstatement, my flat has to be reconstructed, and the cost of reconstruction shall be paid to me, which means the entire society has to be reconstructed for me to get my money. On a market value, on the reinstatement, my depreciation will be calculated. For 203 rupees, 100 rupees a month difference, you really want to save this money and not go for a paid value? Really? Well, that is the saving we'll do, Surabhi.
You're a very passionate member of the insurance sector, Mr. Singhel, and we totally get that. I think you made a point loud and clear, and yes, I mean, one needs to look at protecting this asset, considering the amount of sweat and toil, blood and toil that goes into it. Very quick break. On the other side, your car. Are you ready for the monsoons? The very important do's and don'ts if you want to make sure your claim gets honored. Back in a moment. Welcome back. You're with us on Money, 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 and we are talking about how to get smart with insurance when it comes to your home and your car. Now it's time to talk about motor insurance. Now we know that there is a mandatory third-party cover which we need by law. Then there is own damage cover, and a comprehensive policy packs the best of both of these covers for us. But Mr. Singhel, now here's the thing. I mean, we've had some very unfortunate instances this year, especially landslides, floods everywhere. God forbid your vehicle gets badly damaged in, let's say, a landslide. Or a calamity like that. Do most comprehensive covers take care of situations like these?
Yeah, I think if you look at the comprehensive cover would cover everything, even cover negligence also. Till you are doing something which is unlawful. Let's say if you are drinking and driving, then you meet an accident, then there's a problem. But if it's not unlawful what you're doing, then it would cover everything, right? From a tree falls on your car, or a landslide happens and your car goes in that. A comprehensive cover would cover that.
Okay, but here's again where the fine print debate comes in. Now, I don't know how many people have experienced this or know this, that if you are driving through a flooded street and your car gets waterlogged, and if you happen to turn on the ignition again and again and again, chances are you're kissing your cover goodbye. Supriya, am I not right on this?
Yes, you are right. So if you take a very basic, if you have taken a basic cover and not really looked at what you are getting covered, then, and you have not taken, and the engine protection is not included in your motor policy, then yes, you're right. And again, this is a problem in recent cars which have more electrical parts, etc. That's where this problem has arisen. But it's very important. Bottom line, take the engine protection cover, and there are a lot of other add-ons available which are very useful when there is a claim. So look at the details of what you're getting in terms of coverage, and comprehensive covers are always better.
Yeah, but as you mentioned, apart from the comprehensive cover, the engine protection cover is something you might anyway want to take, because if you happen to live in an area where there's a lot of rainfall, any other cover, Supriya, which becomes very important even if you have the comprehensive cover?
So a zero depreciation cover is important, which means that, as the car ages, the depreciation on some of the parts becomes pretty high. So if 4 or 5 years later you end up with a claim, you are getting much lesser value for the parts that need to be replaced. But if you have taken a zero depreciation cover, then you will get it at the replacement at the current cost. So that becomes very important. Then for a lot of cars, the tire insurance is very important, because sometimes the tire costs are quite high, particularly for the high-end cars. So that's a very, very important cover. Then there is a consumables cover for the nuts and bolts and all the other add-ons that are needed to refit your car. So that becomes a very important cover as well. So there are a lot of covers available. But I think the zero depreciation is probably one of the most important.
Okay, I think, I can handle the comprehensive zero dep, and then we are talking about engine protection. Yeah, I think my memory is not going to fail at this point in time. So it's a good time to get a good recap going. So Mr. Singhel, you tell us, final do's and don'ts, whether it's motor insurance, home insurance, what are the things one must keep in mind?
Okay, so first of all, let's understand this motor insurance. And when you said about this car going through floods and cranking off, I was planning to myself. Now, when this motor policy was designed, those days, car when they went through flood, and if they got stuck and you started the car, nothing much would happen. You would push the car out of the flood water, let it dry, and then you would press on the gas pedal, and the exhaust would go vroom, vroom, vroom. I don't know how many remember that. I belong to that era. And the car will be fit to fine to go. The policy was designed then. Let's understand why this discrepancy comes in the policy. Now you have new age cars, very electric cars, and their the chassis also is lower. So when flood water enters that and you crank your car, it sucks in water, and then when you crank it again and crank it again, it goes in the engine and destroys the engine, which is actually a consequential loss, not a pure loss. I think that is where the problem starts coming in. Now the motor policy wordings, as of now, is still controlled by regulations. It's the same for all companies. So what insurance companies did was they came out with add-on covers, so to ensure the customer does not face any kind of difficulty when things happen. So one request is, which we always mention, is the wording should be free. So at least companies can put it in the same cover. There's no need for an add-on word, because it's now every car has a problem. So that is one problem, and that's a problem first. Now we're looking for a car cover, as mentioned, engine protector would be there. But if you typically are not going and not getting adventurous and driving your car through flooded waters, and your car goes into flood and it stops, then let it stop. Then your engine will not be done at all. These would be price point, and these are more expensive than the home insurance talking about, So an engine protector or a zero dep. Now zero dep also, let's understand why it happened. Earlier cars were metal parts, so you had a 5% depreciation happening. First year, second year, 10%. Plastic parts at 50%. There's hardly any plastic parts then. Now your entire car is mostly fiber plastic. Glass is zero. So day zero itself, you have 50% depreciation for your bumper, happening. Now, when this car comes in, so you have to have a zero dep. Now, zero dep is fine because in the initial stage you want to look at it. But if let's say you want to take it for your older cars, typically if you have no losses happening, you should weigh in the cost of premium that you're paying vis-a-vis what is going to happen. But if you know how to handle the car in what circumstances, then a big comprehensive cover would be good. And third party, you should definitely have. A lot of two-wheelers don't have third party cover. They feel that what can go wrong in a two-wheeler. Maximum 40,000, 50,000 rupees, I can afford that, why pay premium? And a two-wheeler, I have a claim of 15 crore rupees, on third party. And if you don't have insurance, that 15 crore is to be paid by you, So understand that for saving 1,000 rupees a year on two-wheeler, so that is something very critical. A car insurance or a two-wheeler insurance, third parties has to be there. It's very, very expensive, something goes wrong.
Okay.
And from comprehensive cover, do a pro and con in terms of what do you think can go wrong in terms of what you're looking at it.
Right.
But follow the rules, because it's more trouble for you. I think insurance companies pay for it, but your car conks out, then you're done. The engine is gone. That means you're done for about a month or so, in trying to get your car repaired. So don't crank your car if it stops in water. I think
just let it be. Just let it rest and let the experts, the mechanics, or the insurance company come and look at it the moment the water is in.
Just call the insurance company, guys. They'll come. They'll tow your car. They save your car and save you. They are there.
Correct.
Crank your car. Now, don't buy insurance that you want to crank your car in flood waters.
Don't panic and do not crank your car. And on that note, we're completely out of time. This was a very helpful and a very interesting conversation. Perhaps we'll do another round to a deeper dive into home insurance and motor insurance on two separate shows. But thank you very much for a synopsis on this one episode. Thank you, Supriya and Mr. Singhel, for joining in.
Thank you.
Completely out of time. So we will take your leave on this edition of Money, Money, Money. See you again next week.